Hello, this is Bill Scheid from the Systems Lab, and a question we recently got was about holding overnight with the PRX intraday system. And I want to talk a little bit about how you can evaluate which times you might find to be, which time frames you might find to be appropriate for you to hold overnight. And when I think about this question, for me, the primary consideration is adverse gap risk when trading symbols and instruments that don't trade 24/7, right? So if we're talking about trading spot on cryptocurrency, of course that's a 24/7 market, and we don't have to worry about adverse gaps. Although, of course, if you're going to trade 24/7, you do want to have a plan for what to do about needing to get some sleep and how you want to handle that. So, for the purposes of this conversation, let's focus on holding instruments that don't trade 24/7. So, on my chart here, I've got GBTC loaded up, and right now I'm looking at 3-minute charts. My settings are risk at 1,000. So every $1,000 is going to be 1 R when we start looking at numbers. And I have my moving average set to 50. I'm using a function in TradingView called deep backtesting, which allows you to compare similar time periods for backtesting over various time frames. And right here, we've got it set from the 1st of January of 2023 through the middle of this month, which is April of 2023. So I'm going to hit generate report, and what we're going to get here is our statistics, and we're going to just make this a little bit bigger. Not bad, 43 net R. No, that's pretty good. Let's take a look at our list of trades because, our performance summary, because in here what we're going to notice is we have some pretty largest winning trades and pretty largest losing trades. And that's because the TradingView strategy, PRX strategy, is built to trade on 24/7 markets. So there's no end of day exits here, which means we're holding overnight on 3-minute bars. Now, because our stops are going to be tight, our size is going to be big, adverse gaps or gaps that work in our favor are going to produce large wins. We see 21.9 and large losses, 2.97. So if I were asking the question, would I be willing to hold overnight on this time frame? These would be two places that I would want to look to start to get some insight as to whether or not that would feel appropriate for me, if I could handle that level of risk. Now, just for purposes of comparison, let's go back and let's look at, instead of 3 minutes, let's go to 30 minutes. So we want to remember the numbers, by the way. We just looked at 21.9, let's call it 22, and 2.9, let's call it 3. So 22 and 3. Now let's change this to 30 minutes. And let's run the same report over the same time period. And now let's see what kind of change we get. Instead of 22 and 3, now we have 4.5 and 0.8. So we can see that by increasing our time frame from 3 minutes to 30 minutes, of course, we've reduced the size of our adverse gaps and the gaps that work in favor, because now we have larger stops, and so those gaps are going to be smaller relative to the size of our stops. So of course you could repeat this same analysis with any time frame, with any symbol, and with any look back period, so you could get a sense of what these gaps would start to look like in terms of impacting the system that you're considering trading. So hopefully that gives you a place to start and some insight into how to answer this question for yourself. Thanks for watching, and happy trading.